From the morning reading, despite an impressive and consistent rally, penny stock traders have not fully embraced the market, holding back from heavy trading in that lottery ticket market. There's been consistent seasonality ahead of the U.S. tax filing deadline, particularly over the last 20 years. In 3 days leading up to and including tax day, they were only positive 9 out of 20 years, averaging a negative 0.6%, with the max loss averaging twice as much as the max gain. But the week following tax day was positive 17 out of 20 times, averaging a positive 1.6%, with the average loss averaging less than half the max gain. And finally, the VIX fear gauge is now 10% below its 10, 50, and 200-day averages, suggesting investors are significantly more comfortable than normal on all time frames. This last happened March 20th of this year, and July 19th of 2013 before that. Over the past 5 years, the 41 occurrences have led to short-term weakness, but after 3 days there was no discernible negative bias. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:07 a.m. Central Time, and I'm recording this in preparation for the market day of April the 10th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in the overnight. Well, not really all that much. If you look at the 4 broad market indices, you see that the S&P, the NASDAQ, and the Dow all just either scratch or just barely above scratch as of the time that this was cut. The Russell was the most bullish, and it's up, pretty significantly at 0.4%. Crude oil was down 0.32%. Probably the biggest movers of the evening were the euro down 0.5% and gold up about 0.8%. So pretty nice move in gold. Bonds were scratched. So much like the broad market indices, they did not do much. In terms of overseas action, China up 1.92%. Very nice continuation pattern there. Hong Kong 1.22%. Japan down just marginally, about 0.15%. Germany and United Kingdom had a nice night. Germany up 1.24%, and the United Kingdom up about 0.4%. In terms of macroeconomic reports for today, Friday, not very much really. You have a federal budget balance number that comes out, but that will be later in the trading day and is only a yellow flag report, so really nothing on the macroeconomic side that should be pushing anything with respect to our own market. There is another FOMC member speaking, and that's always got a possibility to create a blip in the market. Not likely, though. The news that generally comes out of these things is usually just incremental and kind of for color and gives the media something to chatter about, but usually doesn't have much more than a blip on the market. In terms of our current volatility situation, you see, look at this, the short-term VIX now below a 12, 11.41, and also the historical IV percentiles also dropping pretty much all down in that lower quartile. Now look at the RUT. And the Russell is now a 2. Remember, we had zeros on this, so the very, very lowest implied IV percentiles, were in the near history. So we continue to see very low IV percentiles. In terms of standard deviation moves, it was quite the discussion there for a while, for about 2 to 3 weeks, where we were having a lot of standard deviation moves. But frankly, now the last 5 trading days have not seen any significant standard deviation moves in any of the broad market indices. So getting very calm. Remember, the VIX on the daily chart is in a squeeze, so obviously it could fire to the downside, but not much lower to go. Certainly we can stay in a prolonged time frame of compression, and I'm calling this compression. My best guess at this point is that we do eventually break out, but it is one of those warning signs and one of the reasons that we remain at an elevated risk level. Well, let's go ahead and take a look at that daily report. So on the daily report, the IBD status does remain uptrend under pressure, though we did have an improvement in the GMI index. That is now a 5 out of 6, so much healthier from that standpoint. Active trader market posture remains bullish, and this time it's second day bullish on the market posture. Opinions in terms of position sizing still remain mixed. We have on the one up to 50%, then the active trader position sizing opinion that's based on volatility remains at up to 100%. Market timing today and for the 3-day outlook is slightly bearish, just barely bearish. And then the 2-week outlook is also slightly bearish. So just a tinge of a negative bias for the next few days. And do remember as we go through the next week or so that you do have this seasonality that I talked about at the beginning. So as many high income folks have to sell in order to pay taxes, there tends to be a bit of a bearish stance going into tax day, but then immediately after tax day there's often pretty significant seasonality bias to the bullish side, and indeed April normally is one of the best months of the year, but that comes in that back half right after tax day. So if you're doing any option income strategies or anything like that, you might want to kind of consider those biases that are going to be in front of you in about the next 10 days. In terms of market posture, second day bullish. You notice all 4 indices are with a bullish bias, but they're not very large numbers, but we are slanted up. 49.7, 41.9, 47.2. The Russell being the most bullish. This one is actually, I should probably call this very bullish, in that it is above an 80. We continue to remain with a threshold level 2. So elevated risk levels, and you know, this comes from a number of factors, but you know, number one, we are in compression. We are certainly at some level of risk that this could break down, and you know, as we look across the things that kind of input into this, and in addition to our IBD status and GMI status, you also have these volatility metrics, and we are in that daily squeeze. We still have very high distribution day counts on both the S&P and NASDAQ. We get concerned anytime that's over a 5, and they're currently sitting at a 7. We had a volatility ratio warning fire off yesterday, so actually added to what was there. And then we have that crash warning that's still sitting out there from the E-mini charts. And then we have the intermarket risk aversion indicators, which are now at 3 out of 5. We did have one, this S&P's and the 7 to 10 year bond ratio flip as risk on. So slight improvement on that front. New highs, new lows. For the 1 month time frame in the New York Stock Exchange, had a nice healthy day yesterday with more than 300 on the new highs and only 70 on the new lows, so nothing really to get too excited about from that standpoint in terms of risk. From option income strategy, the VIX is inside the acceptable window, but in a daily squeeze. So consider that as you initiate new option income strategies. I have initiated a couple option income strategies in the last couple days and have another one that is working. So this is certainly not something that you are totally precluded from anymore, but at the same time you should consider your position size and also consider the fact that we could have an increase in volatility. Covered calls, I have not initiated any new covered calls in recent days with this hedge status, and certainly in managing the ones that I'm in, I'm very mindful of this kind of neutral posture and this calling for a 2-to-1 distribution between in the money and out of the money strikes. So that certainly is something to continue to consider. put selling, I'd love to see that we have something of a bottoming pattern form, something to where it shows that we are moving out of this. I will be looking at, frankly, a number of put selling opportunities today. So certainly caution with position sizing, and really strong looking support setups to where you position those puts, and then of course the selection which you use and what you would be willing to sell puts in. And certainly from my own approach, I use a core portfolio basket of stocks that I'm willing to own, and I position this in a number of shares or contracts that I am willing to take possession of should that become necessary, and then start working them through the golden circle, as they call it. So that's that on that section. Let's take a look now at our sector market postures. We have had a good bit of improvement in recent days, firming up this. We've had a couple decent bullish candles, but at the same time, let's not read too much into this. These lines are relatively flat, just a little bit of a down day and all this will flip negative. It's just that weak occurrence stance, so that needs to be taken into account. Retail did recover. Retail had shown some recent weakness. We did have some earnings like Bed Bath & Beyond that missed, and that might have been playing into a little bit of weakness there at that time. Sector market posture percent change, pretty good day. Energy well up. We just continue to see energy just very, very volatile, and if you're a highly experienced and nimble trader, there certainly is volatility there, and that is an opportunity. At the same time, if you are a more conservative trader, the energy sector would probably be one in which you would find great frustration and getting stopped out and just finding yourself, the next day right. It is that kind of market, so be very, very careful in that sector. Utilities also has been certainly fighting that stance as well. Other sectors have been more consistent. Certainly healthcare has been much more consistent. Some of the technology sector industry groups have also been more consistent, so something to consider. Keep in mind that within healthcare, it's not all rosy across all industry groups. The biotech and the pharma group have certainly had more stress than, say, healthcare services, supplies, or healthcare equipment industry groups. And indeed, from an industry group standpoint, our top industry group now, using the shadow trader chart, is retail, followed by internet, healthcare, railroads, biotech, and you see pharmaceutical. These two, biotech and pharmaceutical, continue to remain near the top of the chart, but much higher beta, much higher volatility to ride these components than some of the others. So opportunity again there for experienced traders, but something to be very careful with, and certainly consider your position sizing decisions if you are a more conservative trader. Well, that should take care of it for today. As always, we really appreciate you liking us on YouTube and Facebook and other places, and then of course sharing what you have found here with your fellow traders. More information is always available on the website, and of course you can send us emails to support@falconglobaltraders.com. Disclaimers: hit the pause button if you need more time to review this. And we greatly appreciate you each and every trading day in the Falcon Global Trading community. We'll see you back here on Monday morning before the market opens. Thank you.